I want to learn about. It is what is required to create an effective financial crime risk management system. And to moderate this session, we've got Sagar, Tanna, co-founder and CEO, TSS Consultancy. We've got Niranjan Upadhye, General Manager, Fraud Risk Management Division, Worldline India, as one of the speakers. Radish Singh, Partner, SCA, Financial Crime Compliance Leader, Deloitte Singapore. And Mr. Ravikanth, Global Head, AML and Financial Crime Management Solution at Azentio. I would hand it over to Sagar to to take the discussions forward with the opening remarks. Thank you.
Hey, thank you. Thank you very, very much. I'm actually, quite excited to be a part of this session. It's an honor to be a part of such a diversified and a very, very experienced panel. Together, I think between the three members, we have close to about 80 years of experience, and that's really remarkable. At the start of my career, I remember a quote, from a gentleman, when he said, "Do you think a bank is about, savings account and current account? A lending business is about loans." It actually, all of these business are actually about risk management. It's about taking a risk. And all of these financial institutions, if they do not take risk, then there will probably be no growth. So taking risk, managing risk, is one of the key businesses of every financial institution. And the key pillar or the factor in the risk management is the financial crime risk management. It's something that could, really turn around a financial institution by 180 degrees. It's one of the key risks to be watched out for. Let us start today with an extremely diversified panel with the first question for each concept. I'll probably start with Niranjan. Niranjan, what is one active ticking time bomb challenge that you see today in the financial crime area? And how would one go about trying to identifying it and addressing it? One key challenge.
Well, during my higher secondary, we have learned a law in thermodynamics that says that energy is neither created nor destroyed; it just transforms from one form into another. If you were to extrapolate it to the transactions that we see in the financial system, fraud also never gets destroyed. Fraud has been there and it just gets converted from one channel or one form factor or you know uh, one target onto another. So fraud is here to stay so long as business is here to stay. So we have to reconcile with it, because if one were to uh, completely rout out fraud, it would mean that you stop doing business. So life would come to a standstill. Instead of that, the strategy should always be to meaningfully manage fraud so as not to disrupt business, so as to continue attracting business and doing business the way you do normally, and prepare for some unanticipated things. So currently, or in the last few years, what have we been seeing? And I'll be focusing toward transactional fraud, the payment methods and mechanisms that we all use, principally cards and the money transfer mechanisms as individual customers, be it from us to businesses, peer to peer, from us to governments, etc. We all transact using typically cards, net banking, or wallets, or digital modes of payment. Speaking of cards, primarily, how fraud has been metamorphosing. Uh, Initially, magnetic stripes of cards used to get compromised. You had a lot of cloned cards which would get used internationally. Then uh, India introduced chip and pin. So what started happening? The max stripe which was counterfeited on Indian cards started getting abused or misused in other geographies, North America, South America, and rest of the markets which were not chip and pin at a terminal level. Similar trend was observed in card not present or your internet transactions. When Europe moved to second factor authentication, primarily all European cards started getting used mostly at airlines portals in India. India became a big destination market. So it just keeps evolving, and wherever there is an opportunity, because the three primary ingredients for a fraud to be perpetrated are, you have to have an opportunity to commit a fraud. An opportunity comes because of gaps in processes or gaps in controls, and that is where frauds tend to get perpetrated. So if you have a robust enough mechanism to manage that, not to perfectly contain that, but manage that, I think you would have cracked this riddle and achieved your balance. And as regards future, obviously it is somewhat scary, because fraudsters will be using artificial intelligence driven tools to snoop around systems, to probe and ping for weaknesses, and to deploy countermeasures in flight, so that the existing systems will not be able to sniff out fraud easily. So that remains a major challenge.
Sure. Sure, I think, and I agree with you on the usage and this crypto rise. But on that view on artificial intelligence, it would be nice to get Ravikanth's views. And Ravikanth, who's been instrumental in leading and developing a platform called AMLOCK, used by about 80 plus institutions globally over the last 20 years. Ravi, what would you think, from that perspective, this new age, and what would be that one thing that you would like to warn everyone about?
Yeah, thank you, Sagar, and good morning to everyone for attending the conference. It's a as rightly mentioned by Niranjan. See, you continuously technology is evolving. The fraudsters are also thinking ahead of all of us. When we think that we have a robust solution, we see something new coming up, and this continues to happen, and it is something which is not going to stop soon. See, the major shift which I saw in the last few years is adopting the technology, especially on the machine learning and artificial intelligence, has become, is one of the key factors which financial institutions has to seriously think about it, because a decision making using data insights is very, very important, extremely important, I would say. Large financial institutions are going in the direction, but if you look at mid-size and small size financial institutions, they are still going with the conventional rule-based systems, which is not human dependent, and it has its own challenges with huge data volumes and other things which are in place. The number of alerts, the number of suspicious activities which the compliance team or the anti fraud team looks at, it will be huge. The challenges are very, very huge. Unless until these are supported by the technology, the life of the business users will become a big issue. To tackle that, there should be always synergy. I would say, if you wanted to create an effective financial crime management system, you need to have people, process, and technology. These have to work in tandem and work together. So as the regulatory dynamics are changing and evolving, the pressures are keep on increasing with the compliance users or the financial crime management units. At the same time, we should leverage the technology to the best possible extent and go in line with it.
Absolutely. I think people, process, and technology, and I think it's great insights, from you to hear about decision making using the data insights. I think those are really the two big things that I think I've been able to catch. Moving to Radish. Radish, you've been on both sides of the table you've been, you've been on the regulator side, you've been with the, security, with the Exchange Commission, and now you've been on the other side, you're kind of helping, some large financial institutions, with this side. And what has been your, single identifier about one of the most sticking challenges?
Thank you, Sagar, and very good morning to everyone. Great to be here and sharing perspective all the way from Singapore. So, Sagar, just like, what Niranjan and Ravikanth shared, right? I mean, one thing Ravikanth gave a very realistic picture about where the industry is moving today, and then also the sort of rule-based technologies, if you like, very human dependent. And then Niranjan gave a very scientific explanation about fraud, and it's not going anywhere. And I totally agree, right? So I think what is the challenge really today is that financial crime is not going anywhere, right? So as far as financial institutions are concerned, so I've been with the regulator. I've been with 2 global banks, and now as a consultant for many years, right? So I've seen the whole circle. What I've seen is that the crime doesn't go anywhere. In fact, people get more sophisticated. Criminals get more sophisticated in trying to beat the system and game the system. They are as aware as we are. They probably have understanding of the technology, the detection, scenarios and systems as all of us do on this, call today, right? Or on this webinar today. So I think the challenge really, Sagar, is to keep up with that and continue to innovate. Continue to become better at detection, continue to become better at prevention. That's been the journey that we've been on with a number of our clients. And if you even look, Google up, you'll find 3 white papers that we've written with one of the local banks in Singapore, with UOB, on their AI and machine learning RPA journey, right, to innovate in the sort of the processes or upgrade and enhance their monitoring and detection capability, right? So we've been in that journey as a partner with our client, for a number of years now. So I think that challenge continue to exist, that you always have to up your game, right? You have to up your game from technology perspective. You have to up your game from regulatory perspective too. So even regulators are not today backing down and saying the dust is settled and this is it, right? It's not there yet. No one's got the answer as to where this is, really going to stop. The challenge and the expectation from regulators continue to rise, right? As with defending your programs and your framework from criminals also continue. So it is trying to make sure that you keep everybody happy, keep your regulator happy, and you also make sure that you are able to continue to operate your business in a credible way, because what is banking all about is about trust. It's about trust with your customers. Is about trust with your internal stakeholders. So you always have to also make sure that those aspects are managed, right? So yeah, I think what I'd say is that really the challenges continue. It's just that sophistication also is keeping pace, and therefore sophistication on both sides, sophistication of the criminals, and therefore internally the banks also need to be as sophisticated.
Yeah, Radish, I kind of agree with you on that. But one of the things with so much to do, Ravikanth spoke of having people, process, and technology that requires huge investments. You spoke about how do we constantly need to upgrade ourselves. Niranjan talks about things are changing fast and they're doing things are really rapid. All of these, require a significant amount of, resources to be allocated. A lot of financial investments are going to go in, and what is your thought process, Ravikanth? You've been working with, so many institutions, globally, and how do you see that approach? And do you have anything to share with the investments that go into this and the outlook?
Yeah, absolutely. See, as we speak, when the regulatory changes are changing dynamically and evolving, the pressure on the business users, especially the compliance team or the financial crime units, is tremendous. And at the same time, if the more number of alerts are coming into the system, the investment also should increase. But cost is a major aspect which all the financial institution will be keenly watching about. You need to have a clear check on the cost, and at the same time, see how we can best leverage the technology. See, my guess is in the next future, in the near time, in the next 3 to 5 year horizon, I am looking at people adopting to the cloud platform, considering that cloud platform is the way forward for at least mid-size and small size financial institutions, because you can't have the on-prem deployments managing the solutions. If you want to grow substantially, scale up substantially, that's the way forward. I am actually looking at which the financial institutions would adopt down the line, because resources I can't upscale. I'll take a classic example. You take one large financial institution in India. The transaction volumes are huge. See, if the system, you have a very efficient system. If the system throws up hundreds of thousands of alerts into the system, it is practically impossible for the compliance users to actually act upon them. So it should be backed up by something, the system driven technology. For example, AI can help in actually giving a better decision making. Probably it will prioritize what is important, what is not important, so that the human made decisions can be taken only for the prioritized items, and rest of the items can be managed by the system. It's always, you need to have the right balance between the system, AI based decision making, and the human made decision making. If these go hand in hand, then it'll be proper.
Yes, I agree with you, and I think that's a great point about cloud, because it would actually allow us to save that many more resources and kind
Yeah.
of redeploy them towards doing upgrades of our technology. So Niranjan, you're actually right there. So while Ravikanth represents the technology side, and Radish represents the consultant, the partner that helps you to put all of these together, you are out there actually trying to convince the senior stakeholders to allot resources. So tell us some of your personal experiences and some learnings in terms of having to get these resources.
Right. So as Ravikanth was saying his mind out, I was kind of smiling because his thoughts quite resonate with mine. See, in any business, uh, effective and efficient management of frauds, and when I say efficiently, it means it has to be cost efficient and benefits have to be tangible, because ultimately we are a cost center, we are not a profit center. And obviously the investments towards containing or managing frauds or monitoring endeavor that a company makes, they cannot be exactly proportional to the additional business that they are seeking, because it's a no brainer. Our costs ought to go down. At the same time, our infrastructure should be scalable enough so as to meet the additional business demands or expectations. So I completely agree with his point, and the traditional way of managing frauds would no longer be efficient. It is not tenable even as we speak now. So the only way I see the things moving is like Ravikant said, you know, uh, let's say a fraud monitoring system is going to throw, let's say, 100 matches, uh, the triggers or alerts that give potential irregular transaction. I, as a fraud manager, would be happy if all those 100 matches would result into catches. Currently, the catch to match ratio is not very high. I would be very happy as a fraud man, and it's utopian. Let me tell you, let me not deceive you. If the catch to match ratio is going to be 100%, I will be happy, and so will be, the business heads. So that remains a tough task, but obviously, with AI coming in with things like random forests and the way algorithms are getting plowed in to the system, they are yielding better and better results as we get to know our customers, as we get to know markets, as we get to know, the transactional trends more keenly. So I think the efficiency will only improve provided there is the right amount of focus, the right amount of direction, and everybody works in consensus.
Agreed, agreed. And I'm definitely, Niranjan, going to borrow the phrase, the match to catch from you. So, in terms of this, Radish, you've actually been engaging with these kind of assignments where you probably have on one side the financial crime units with whom you're very closely working with, to understand the challenges, help them revamp the programs, and on the other side you have the senior management where you have to kind of present them and seek their guidance and get them along to making these investments in the financial crime programs. And what are some of your experiences in this? Because you've been on both sides. As a regulator, you expect this to be the highest priority, which kind of resonates with the financial crime unit, but not always the boards are looking to do as much allocation as the financial crime unit would love to. So how do you kind of get the balance right?
That's a million-dollar question, Sagar. You talked about resource allocation, right? And then, both Ravikanth and Niranjan talked about the challenge of too many false positive, inefficient, processes or systems that still exist. But I think therein lies the issue of trying to manage your internal stakeholders to get budget approvals and to make them understand the benefit of upgrading and in using new techniques, new technology. All of this has a financial implication to it, right? So that conversation always is not an easy one. But I'll share with you some of the success stories, as it were, right? If it could be called that, it's an uphill task. I would still conclude. But with some of our clients and also us helping them in their journey, what helps is to actually draw out a comprehensive, and it can never be comprehensive, but I'm just using the term for want of a better word at this stage, a comprehensive strategy to demonstrate where financial crime compliance innovation is going, right? Because look, I think the BAU compliance with regulatory expectations is an ongoing thing. All banks have it right now, right? So that's not an area, and that area obviously you continue to invest into, and you tend to get the best you can in the market. People who are subject matter experts and understand regulations. That bit is easy. Oh, relatively. But now when you're talking about big investments and you're talking about, to Niranjan's point, when you're talking about the cost and benefit, right? Where he said that, look, the benefit has to be tangible, then where are your quick wins? I think one is to draw up the strategy to say, look, in the next 5 years, if we keep doing the same thing, we're not going to get different results. So we do have to do things differently, right? To get different results. And these are the areas where we can innovate, where industry is heading to, or where new technologies or new capabilities exist. Because our initial investment looks like this, but our long-term gains are these. And the long-term gains are not always, when you look at it from a regulator and compliance perspective, the long-term gains are not always monetary gains, but it is also efficiency gain, it is effectiveness gain, it is being better at managing risk, right? So you have got to really come up with that holistic picture. That's step one. And step two then is to demonstrate with quick wins. You are quite unlikely to have a board or a CFO of a bank that says, here you go, here's $100 million, go and play with it. That's not going to happen, right? So it's going to be in bits and bobs. So you really need to choose what your quick wins are, where you can make some investment, but then demonstrate the benefit. To Niranjan's point, you have to always go back, manage your stakeholders to say, look, we invested this much and these are the benefits that we are seeing, and now we need more. So that is one approach. It's probably not the best, because sometimes as you are done with one process, there'll be 10 other things that have innovated in 10 other innovations that come up, right? So you're constantly at the back foot playing catch up. But I guess in the scheme of things, this is one way forward. This is what we've seen. At least have been, successful with number of our our clients. But I guess today the quick wins are, I think all the speakers mentioned, I mean, using AI and machine learning for better decisioning, so you're not inundated with false positives and not throwing warm bodies at a problem that is not a problem, right? You want to focus your resources. When you talk about resource allocation, you want to focus on material risk. Where your risk is, you want to go there. And also looking at removing some redundant processes, using RPA for repetitive work. So there are so many different things that can be done, but also moving towards what we advocate as a very different way of doing surveillance. We call it holistic surveillance, right? So that's a topic on its own. At some point, we can possibly talk about it. Like I said, if you keep doing the same thing, you get the same results. So you want to do things differently.
Agreed. Yeah, I think we keep doing the same things. You probably never achieve different results. And I also like what you spoke about showing the benefits, right? I think and this is something so basic that if we are able to constantly show benefits, I think we probably get more and more allocation of resources because things are working, and they're working for good. So Niranjan, tell us, something about on the technology side. Give us some, specific insights in terms of in the cards or the payments space that you're into. And as Worldline, your parent company is the largest processor in Europe. I mean, what exactly are some of the areas within technology that you're focusing on? Because it's changing so rapidly. I think one of the biggest problems is the pace at which things are changing. So, what are some of the fundamental drivers of technology innovation that you're looking to follow?
Absolutely. So, uh, when it comes to you know uh, managing the credit risk while onboarding new customers, earlier it used to be physical documents that would be validated and vetted by a pair of human eyes. Now, whereas we continue to do that, there is also a parallel process, and there is a growing shift as we develop more and more confidence toward discerning the so-called pumped in applications or fraudulently made bank statements or identity proofs or other collateral material that is available to me. We are even scanning it through OCR, and the OCR is always getting updated with the latest indicators of what fraudsters input toward making fraudulent documents. So the OCR recognition or the reader is becoming more and more efficient. It is able to actually parse and pick up the documents that have been fudged or fabricated. There is also a shift. See, these are the days of instant gratification. So people, merchants want to be boarded instantly. People want, their credit lines to be extended near instantly. And the paper based applications are no longer in the vogue. Your preferred mode of interaction, communication, applying toward facilities uh, typically is your mobile device. Now there are around 200 attributes of a mobile device, different sensors. Your mobile device is as unique as you are. So the way you use it is unique to you and not to other users of the same make or model. So depending on how the interaction is coming in, there are ways for me to discern whether this request is coming from my legitimate customer in the first place. Secondly, in the background, I also have a process running which tells me how differentiated a customer is from the peers, because one size fits all no longer works. I need to treat each customer differently. So apart from credit bureau score, there are also now the so-called OSINT, open source intelligence checks. His Facebook profile, his LinkedIn profile, his social media activity tells me a lot of what and who and how much worth a customer is to me. His established credit history can also give me a reasonable insight on how good or bad this customer would be, and then what rate of interest or API I can charge him. Of course, there are things beyond the obvious. Suppose there has been, a job loss. Suppose there has been a hospitalization or other contingency which affects his ability, and perhaps not willingness, but ability to repay me. Probably I need to factor that in. But what I have said earlier pretty much determines what a customer will be worth to me, what is likely to be my fraud exposure, or losses from him. That allows me to tailor make offers for him or her, and that is the way ahead.
Absolutely, and it's striking to me about the 200 attributes that you spoke of. I would all of a sudden start looking at my phone and say, okay, that actually is a persona of its own. Um, so, so, so Ravikanth, I know you run a big center of excellence, in this space, and with the kind of spread that you have across jurisdictions, I'm sure you kind of get a lot of different requirements from so many customers. And what are some of the things that you are, working on? What are the trends in the new technology innovations that you've been working on at your excellence? And we would all kind of love to hear it. What's happening in labs?
Okay. That's a good question. I think, every vendor has this challenge to keep up to the expectation of the, business users. See, what is happening is off late, there have been tremendous pressure from the regulatory bodies. Okay. They have been coming up with too many changes, asking too many requests and asking the financial institutions to comply with too many change, things at a very rapid pace. So there itself, you have a big problem. You have a deadline and you are given a problem. So one is that keeping up to the regulatory changes, meeting to the regulatory changes is one aspect. And at the same time, you need to have efficiency in the way you are managing. Then only you can actually cope up with the work. These can be managed only if things are automated. See, customers, most of the clients are looking at automation of things rather than human, driven thing. Everything, is currently human made, human driven. They're looking at the processes to be completely automated. They're expecting the system to be supported by technology so that they can take better decisions. So that is where artificial intelligence plays a key role, especially in the decision making part. See, where all decision making comes, wherever there is a major pain area, false positive management, okay, risk-based analysis, identifying anomalies which a rule-based system cannot identify. These are some of the key areas where the machine learning algorithms would definitely help the financial institution. And in terms of automation, so RPA, as Radish has clearly mentioned, RPA is something which has to be adopted by the financial institutions, and this is a prominent thing which most of the clients in the developed markets have been using it. But slowly, customers in the emerging markets are also, adopting the RPA processes. So it's a blend of, I would say, it's a blend of automation. You can call it as a robotic process automation, and with supported by AI-based algorithms is the way forward for the vendors. That's the only way you can complement the business users so that they are offloaded with the pressure what they are currently doing.
Absolutely. Absolutely. And yes, I think to the limited exposure that we have in India, we are definitely seeing a lot of adoption, on the artificial intelligence and definitely at the RPA side as well. So Radish, coming to you, I mean, with this technology innovation that Ravikanth spoke of in terms of artificial intelligence being used for decision making, some of the people that I kind of meet up with always have this fundamental question that how do you convince a regulator about the artificial intelligence system being good enough, and what are the models that are going behind it, And I'm sure you're a part of evaluating multiple systems, with your clients and trying to tell them which should be the right system. Then how do you kind of convince yourself that this is a reasonable level of transparency, in an AI model? How do you do that?
Yeah, so I think that's a very valid question, Sagar. In fact, we do a lot of what you call model validations, and we've done model validation also for the use of AI machine learning, right? Along with obviously, many other techniques. But what is key? What is a regulator looking for in technology that we deploy to manage any financial crime compliance process, right? So. I think one of the key things is really that if you are rule-based engines, I think that's legacy, right? And we possibly look more in terms of whether the system is tuned appropriately. Is there ongoing assurance to make sure that you stay relevant? You look at your customer-related segmentation and risk continuously, so that you are tuned the right way in order to detect the sort of material risks, as it were, right? So that's one way, if I could summarize this. But then when you're looking at AI, the use of artificial intelligence, what are we looking for is really explainability of the models, right? And I know it's a bit of a motherhood statement. Everybody talks about explainability, and what does it really mean, right? It means that whatever algorithms or models that you're deploying, you should be able to explain it in business language, right? Not only in technical language that nobody can understand. So also from business perspective as to how they operate. So the key thing for me as a compliance person, when I'm looking at validating this, is to really, obviously I have a technical team, they are data scientists and whatever, not right, rocket scientists I call them. They can look at all the technical element of the formulas and stuff like that. And for me, it's more what is the data that is going in? What is the model doing to analyze that data? And then what is the output it is turning out? Very simple. I mean, I put it in compliance language, and that's what I'm looking for. So that's always my challenge to my team as well. What are you, showing me, right? I think that's one way to look at it. And that's the way that is the manner in which we've been writing our reports to convince the regulator as well, or otherwise also convey to our clients where the issues are, right? Where they need to still fine tune the models, or where they need to still do a little bit more. Now, models are one thing, Sagar, but the key thing for any technology, and I think Niranjan and Ravikanth will tell us that too, that data is key, right? First, you need to make sure that you make a lot of investment into cleansing your data, creating the data lakes, or whatever data marts, etc. that that you have. Data should be from source. Data should, the lineage of the data should be decipherable. The quality of the data is something that you really need to work on, right? Otherwise, it's garbage in, garbage out, right? So you want to first focus on data, and then I think there's a lot of elements of how model validations can be done to give assurance to regulators and also to internal stakeholders. But one of the key things that I wanted to point out very quickly is that we all talk about removing sort of ineffectiveness, right? But you know what? I think ultimately, whatever technology and innovation that we do, the ultimate game is to reduce noise, right? To have more yield, right? So that we are able to detect what is material. And secondly, to remove human error, but not human judgment. The human judgment element will always be there. That's the higher value work we want to focus on. The low value work, we can give it to the machine, but the higher value work will always be the trained, experienced human who's going to use his judgment and analysis, right?
Absolutely. And I completely resonate with you that I think we just keep getting more and more intellectual with our work. We want to be doing more productive work rather than spending time on something that could be done by a system. But on that rocket scientist, Niranjan, have you been in a situation where you're trying to explain something to your board, and all of a sudden you sound like a black box man, and they're like, what are you even saying? and how do you then handle that kind of a situation, saying we simply couldn't understand? Have you been there?
I have been there a lot of times. Thankfully, my board and my seniors have also seen some experts, in their own esoteric realm of things, and then they use, languages and terms such as Hadoop, which by the way is some kind of a specific programming language. Then they use things such as, random forests and other things, which just tells me that okay, it's a set of decision trees. So when it comes to me, I try to first understand the things at their most basic level, and then I try to explain those things as if explaining to a novice, because using jargon, rarely helps. I have always believed in going back to the most basic level, and like Radish said, and I completely agree with her and resonate with her. These days we are inundated with data. And what is data? Data is just, an aggregation of random pieces of information. So this data, when you ask questions like who, what, when, where, and why, it becomes information that can be processed for a specific purpose. Now, out of this information, you know, if you check out the relevance of it, you will come to know how to apply that. And there comes the knowledge. And once you apply that knowledge in action, you have wisdom. So I first try to gain the wisdom and just try to instill the distilled wisdom. And obviously, I also trust in the board's own wisdom, because obviously they are stalwarts and experts. So it's the collective thoughts that we put across the table, debate. Thankfully, it is very democratic. People can put across conflicting ideas, and then in consensus we choose the best course of action.
Absolutely.
I would like to add something here, Sagar. Okay.
Please.
The data models, as as mentioned by Radish in the evaluation, that itself is a quite challenging exercise for the financial institution. See, a data model where one ML algorithm is adopted may not be the valid thing for other financial institution, because the algorithm would vary based on the data set, the attributes what we are looking at. And every financial institution will have different types of data. And the more gaps you have, the more challenges you are going to see. So adopting to the right model, choosing the actual attributes which will be relevant for the data model itself will be big thing. And this model is not something which is uh, written once and it works all the time. It needs to be continuously fine tuned, and that's how the AI based programs or decision making systems would have to be managed. And these are continuously every 6 months probably the model have to be looked up to into, and we have to see the efficiency of the algo. See the accuracy of the algo. See, for example, if it is throwing a 90% accuracy, that's a phenomenal score in AI models. So that way, the financial institutions will always have the challenge of validating the models, looking at the accuracy, and continuously upscale them also.
Absolutely, and I kind of relate to now what you're saying in terms of 90% accuracy. I think if we are able to achieve to that golden number, that's a phenomenal success.
Yeah.
And to Ranjan's point about collective wisdom, I think that also is extremely critical. That if we are all in it together, and if everybody is really trying hard to get it right, then there are very high chances, along with the board and you, that we will move in the right direction. With that, I would all of you had such long and very diversified landscape and careers, and it would be very nice for me and the other audience to hear one advice from you, something that you really kept at the top, something very basic, saying this is one single thing, this is your advice to the people of this community in financial crime, risk management landscape, saying this is one thing that you should always follow or keep it at the top, or something that has worked for you like a growth hack in this space. Maybe Radish, we could start with you. Love to hear you on that.
I laugh because I have a laundry list of things. There isn't, one thing, but but one thing I think in today's day and age, what I would say is that don't be afraid to innovate, to look for better answers, and to manage the risk in a better way using technology and also uh, synthesizing or cleansing your data in order for it to operate more effectively.
Perfect. So Radish says, don't be afraid. Just go out, cook lunch, and give it your best. Over to you, Ravikanth.
Yeah, see, the biggest thing what I would look at is the financial institutions have to be clear about what exactly they need to do. Okay. Here I see a gap, in the way each financial institution understands the financial crime. So they need to be clear about their requirements, about this is what need to be done, and what technology need to be adopted. Choosing the right technology partner is also extremely important. See, what can be done manually, what can be done through system driven thing has to be rightly decided. On top of it, the other more important value add I would like to give is there should be a secure based data exchange happening between the financial institutions. If that happens, it will help the financial institutions in doing a better due diligence, better decision making, so that things are transparent. So currently we don't have a secure data exchange mechanism happening between the financial institution. Probably I'm expecting that this may happen sooner or later.
Uh, Over to you, Niranjan. I think Ravikanth has, put emphasis on clarity at the organization in terms of be determined on what you want so that you select the right partner. And please make sure that, the exchange of data happens in a secure way. And there's a question that has already come from the audience on those lines, and we'll quickly open that up. But before that, Niranjan, what is your final, advice?
Well, to begin with, I will just want to extend somewhat what Ravikanth has stated. It is extremely crucial for all financial institutions, lenders, and entities in the ecosystem to work hand in hand. It is also equally important for all the players or stakeholders to contribute to the so-called negative list, entities where fraud has been detected, entities that have been terminated for a cause, as they call. So, unless you are an active contributor, you cannot expect to be only a user and just derive benefit out of it. Because if today another institute has been impacted and you think it is none of your problem, tomorrow the same customer may enter your system sideways and cause a big dent. So I think there has to be both incentivization for members to contribute to such database, and there should also be some punitive action if somebody is still ignoring such a listing, and therefore end up attracting any chargebacks in the cards scenario or fraud related disputes. Then probably they should be bearing the brunt of it because they simply ignored what was put across in front of them. And my second bit of advice, and I have been a great believer in this, and
Yes.
retail businesses will concur with what I say. As they call it, there are these pipeline leakages, which vary
Right.
between anywhere between 50 basis points up to even 2%. And mind you,
Right.
in a high turnover business,
Yes.
1.5 or 2% is all the margin that you make. So unless you stop these small, seemingly small losses, you are going to end up with a big hole. And therefore,
Correct.
stop even the smallest of losses the moment you recognize. Learn to
Sure.
forecast, be led by what you see around you. And whereas credit bureaus are a great tool, don't be blindsided to the
On
other
them.
things that are happening around you.
Absolutely. I think that was great insight, Niranjan, on becoming or changing the mindset towards let's contribute. This is our community, so that everyone benefits. I think that's a big one. So we are just about time, and I think we have one small question. Many companies today face ransomware attack, which could be a precursor for a financial attack. That could be an early sign. And how do we preempt these attacks? With some specific AI tools. Maybe anybody will want to take that up. We are just about our time, so maybe a quick, effective response would be.
These have to be completely backed up by the way the security framework is designed, Sagar. Okay, extremely important. See, when we all this while we've been talking about how effectively we can manage the financial crime part, but at the end of the day, it needs to be proper. You need to have the complete environment infrastructure in a highly secured manner. Data security, the infrastructure security, everything is the key thing. If you adopt the latest security frameworks, and if you design the your environment in such a way that it is highly secure, so we can avoid these kind of attacks.
Got it. So have a good data security framework, identify the right areas, and then choose the latest framework. Perfect. I think Soham, we're just about time as well. I would just like to quickly conclude on a lot of learnings that at least I have got, and all of us. I think we started with Niranjan talking about the thermodynamics, and I think I really like to say that this is going to be here. The energy on the financial crime, the criminals are here to stay. It just changes from one form to the other. And then, talking about resources, we heard how Ravikanth, guided us to saying that if we go more towards cloud and artificial intelligence, we can actually save on resources and keep inventing. And Radish's inputs, over how the regulator would look at it, keep it simple for the board, keep it lay, focus on data quality, because that is really the most important thing. With that, I think we all believe that everything is here to stay, and we all got to keep our heads up and try and beat expectations and not meet them, which will eventually allow us to win this fight against financial crime. So I sincere thank you to IAMI and Ravikanth, Radish, and Niranjan to allow me to host this panel. Thank you very, very much.
Yeah, pleasure talking to you guys. Thanks a lot. Thank you so much. Thank you, everyone.
Thank you, speakers, and thank you, Sagar, for running a very interesting conversation. I'm sure our delegates have enjoyed the insights that have been shared by the speakers. We'd like to thank our partners, Refinitiv as a session partner, Regulator, gold partner, Netherlands Embassy, the gold partner, Cybersprint, gold partner, Unfido, bronze partner, and EY as a knowledge partner for Percy 2021. We'll get delegates, the new other sessions coming up after this, and thank you for your time.
Thanks a lot. Thank you, everyone. Take care. Bye.
Thank you.